watching Business Incorporated live on Channels Television. Coming up, ECOWAS Bank investment raises authorized capital to $3.5 billion. While Egypt's net foreign reserves edged up with IMF financing on the way. South Africa's APSA Purchasing Managers Index rose to 50 index points in October. Great to have you join us. Quite a rainy afternoon right here in Lagos, Nigeria. First off, let's kick off with your markets now. It's all red in Africa. We see the NGX there down 0.09%, not following the close that we saw yesterday, closing at up 1.23%. But now it's back to 0.09%. Down, could switch before the close of trade. South Africa GSC there 65,873 points. That's down 1.76%. Talking about Johannesburg Stock Exchange. Let's flip over there to North Africa now. We see Egypt also down 0.39%, and Kenya closed negative again yesterday, down 0.51%. So it's all negative we're seeing in the African region there. Let's move over to the Middle East. Middle Eastern markets there, we see it's also all red there. We see Abu Dhabi index down by 0.74%. Dubai index there, talking about the UAE, 0.63% down. Move over to Saudi Arabia and Qatar. We also see it's a bearish trend there, down 0.65%. Qatar down also 0.98%. We're looking at how the Saudi and the Middle Eastern markets actually closed at the end of trading today, talking about the Middle East. Let's move over to Europe now. We see German Chancellor Olaf Scholz has promised not to ignore contentious talking points in a high-stakes visit to China tomorrow. Well, Ben Fajolin joins us now to tell us more about the trip. Great to have you, Ben. So this will be the first G7 leader to visit China since the start of the pandemic.
It's been a long time. Scholz will also be the first leader from the European Union to visit China since late 2019. And of course, we're talking about the guy in charge of Europe's largest economy. Scholz has faced a real backlash for undertaking the trip as his counterpart Xi Jinping presents himself as more and more authoritarian. Members of Scholz's own coalition have raised concerns about Germany's heavy reliance on Beijing after it became so clear with the war in Ukraine that Germany had become heavily reliant on another authoritarian regime, Russia. As you know, Moscow has been slashing energy supplies to Europe due to sanctions over its invasion, plunging the continent into an energy crisis. Other European leaders have frowned on the visit, the US too. It recently raised concerns about Germany allowing Chinese shipping giant COSCO to buy a stake in a port terminal in the northern city of Hamburg.
All right, so will politics or business be top of the agenda?
Well, critics were always very vocal about previous German Chancellor Angela Merkel addressing human rights issues on her trips to China, which were largely business-oriented. And many of the issues were and are still business issues, like the profiteering of global companies from China's forced labor camps in Xinjiang. But whereas Merkel largely shied away from criticism, a government spokesperson does say that Scholz will not only press China to open its markets more, but also raise human rights concerns and discuss autocratic tendencies. Still, he'll also have a delegation of business leaders with him. According to sources familiar with the matter, chief executives of VW, BASF, Siemens, Deutsche Bank, BMW, Merck, and BioNTech. No company deals are planned, but the Munich-based World Uyghur Congress accuses Scholz of overlooking the genocide taking place in Xinjiang, saying his decision to bring a business delegation shows profit continues to trump human rights.
All right, Ben, but how are the markets looking right now in Europe?
No guesses there after that rate hike in the United States added to fears of a recession. Asia joined the Wall Street plunge, and so did Europe. Shares opened sharply lower. The pan-European stock 600 fell by around 1%. Tech stocks were down 1.5%. Travel and leisure companies in Europe lost more than 2%.
All right, that was Ben Fajolin there with all the details of what's happening right there in Europe. Still eyes on those markets. Thank you so much. All right, now let's move on to the UK now. It's BOE Day right now. We have Juliana now with all the details. Great to have you, Juliana. So, yeah, I'm sure it's in now.
Good afternoon, Laddie. It is in now, and just as I'm speaking to the Bank of England Governor Andrew Bailey is talking, and it is an incredibly important statement that he will be giving to the British people, because the Bank of England have said that they expect the UK to head into its deepest and longest recession ever. Let's first of all go to the rates. The markets were right. It was the highest rate rise that we've seen since the 2008 financial crisis of 0.75%. That now pushes interest rates up from where it was at 2.25% to 3%. So this is great for banks because profitability is obviously up and high, but not great if you have a loan. So people who have credit card loans, car loans, of course everyone's been talking about the big loan, which is mortgage borrowers. They're going to be expecting their mortgage rates to rise significantly, not just if you are on a non-fixed mortgage. Even if you are on a fixed mortgage plan, you are going to be seeing your monthly payments rise significantly. Lots of mortgage experts doing the rounds on British media now, advising people, especially those who are on a 25-year mortgage, you know, putting their hands up thinking it's all a daisy, to go to your bank and seek advice. So that's that aside. I think it's worth mentioning as well that it wasn't a unanimous decision. There are 9 Monetary Policy Committee members. Only 7 voted for that 0.75%. 1 opted for a 50 basis point rise, the other 25 basis points. Some think the aggressive stance isn't good for those who are borrowing. But yes, I think the big takeaway from the decision today is the outlook, and the outlook is particularly gloomy. We do talk about the cost of living. I know for some of our viewers, Laddie, it may seem like a kind of hashtag first world problem, but this is a significant problem. It is really impacting the lives of people living in this country, and it will certainly trickle down to remittances and the money that people have been sending back home to help their loved ones. We are really squeezed at the moment, and it's not just the vulnerable or those on low and no incomes. It's hitting middle income earners significantly because they are getting the least support from the government. The Prime Minister last week said it was those with the broadest shoulders that are going to have to take most of the burden, and we will hear more about that on the 17th of November. But Andrew Bailey did say that, yes, we are going to be going into the longest recession on record. He believes, and most economists do believe, we are already in a recession. We're in the 3rd quarter. He thinks GDP is going to dip by about 2.5%. It will dip further by about 0.75% into the first half of 2023, and British GDP may only recover in late 2024. So there's lots to try and rifle through. But the big thing, to go back to what you were asking, interest rates have risen by 0.75%. Currently at 3%. The era of low to no interest rates in this country is over, at least for the foreseeable.
Right, we see the BOE there forecasting a big recession, you know, for the UK. Any sound bites about more rate hikes going forward?
There will certainly be more rate hikes going forward, and it has been a really delicate balancing act for the Bank of England. And I discussed this with you, didn't I, this morning on Business Morning, Laddie, that this is the 2nd time that the MPC have gone into their meeting blind. You know, this time last month, it was on the eve of the mini budget, which caused so much market turmoil and ended up having the Bank of England were having to kind of bail bail out Liz Truss's government to protect pension funds in this country. And then, of course, we had the postponement of the fiscal statement, which was supposed to happen on Monday, the 31st of October. Rishi Sunak, obviously very new Prime Minister, decided with his chancellor that they were going to push that back until the 17th of November. So the Bank of England don't have that data, that crucial data from the Office for Budget Responsibility, which is going to forecast just where the holes are in the Treasury and make a decision on how we, the taxpayer, are going to have to pay for it. We borrowed significantly during COVID-19. People were paid literally to stay at home. You know, there were grants being given out without any bureaucracy, without any red tape. Some people were, you know, applying for a £50,000 loan at 9 a.m. and receiving £50,000 in their bank at 1 p.m. You know, so much fraud was taking place during that time, and we've got to pay for it all back. That's the issue. That's the only way Britain is going to be able to get its international financial credibility back, if we show that we are willing to pay for this debt, which is almost at 100% of GDP. So there are significant hurdles. It'll be interesting to see exactly what Andrew Bailey is saying as we talk, but certainly a deep recession is expected. Not a great time when Christmas is just a couple of weeks away and consumers are already feeling the pinch at the checkout.
Right, and obviously economists did warn about all those stimulus checks, you know, back then, and we're feeling it now. But I can imagine how the markets are actually looking right now.
Yeah, let's have a look at the markets. This is not a live update on the markets because I know that the pound, which had been rallying earlier in the week against the dollar, has fallen significantly. But we will have a look at what we have right now. The all-share is down 0.59%. The FTSE 100 down by 0.55%, and the FTSE 250, that's down by 0.88%. Now, this is a live capture of the currencies market, but the last time we did check, the British pound was down on the US dollar by 1.02%. From what I just saw, the British pound is worth about $1.12 at the moment, which is significantly down from where it was yesterday at about $1.15. The British pound is currently trading down against the euro by 0.31% and down too against the Japanese yen by 0.83%. So red is the colour of the City of London at the moment, Laddie.
Expected, you know, with all of this gloomy forecast. Thank you so much, Juliana. We'll get more details tomorrow.
Thank you.
All right, that was Juliana there giving us the latest from the BOE right there in the UK. Let's move on now to other markets. We see shares in Asia Pacific also dropped today after the U.S. Federal Reserve Chairman Jerome Powell signaled further hikes ahead after raising rates by 75 basis points as expected, and called discussions on pausing tightening cycles prematurely there. So we see it's all red also there in Asia. Nikkei 225 there, 27,663 points, down 0.06. Shanghai Composite also down 0.19%, and the HSI there down 3.08%. So it's all red right now in the markets we track right there in Asia. Let's move on to the U.S. now. We'll see stock futures were also down earlier. Federal Reserve delivered another interest rate hike. It's all about the interest rate hikes there by the Fed, and that's also spiraling into that market there. Futures tied to the Dow Jones Industrial Average there. You see that traded down 0.50%. S&P 500, 3,743 points. That's down 0.66%. We see the NASDAQ there almost getting to the 1% level down. So interesting to see how the markets actually close today. Let's move on to the oil markets now. Oil slipped also as the U.S. interest rate hike again pushed up the dollar and increased fears of a global recession that will crimp fuel demand, although losses were capped by concerns of tight supply. Brent crude dropped about $1.05 to $95.10 a barrel, while U.S. WTI crude futures fell $1.27 to $88.73 a barrel. Both benchmarks settled up more than $1 on Wednesday, aided by another drop in U.S. oil inventories, even as the Fed boosted interest rates by 75 basis points. And Fed Chair Jerome Powell said it was premature to think about pausing rate increases. All right, we'll take a break now. We'll come back. Commodities Market Update is next. Just stay with us. This is Business Incorporated. All right, now to our next conversation. Well, the projected expansion of the fast food industry by 4.6% annually has attracted various international franchises such as Burger King into the Nigerian market, despite the country still reeling from COVID-19 induced demand shocks. On average, about 20% of our spending on food goes to meals consumed outside the house, including those from fast food restaurants. We have Miriam O'Day now joining us, financial analyst at Financial Derivatives Company, to tell us how that market is looking. Great to have you on the program.
Good afternoon. Thank you for having me.
Yeah, so we've seen those prices actually go up. We've seen a consecutive monthly increase in food inflation, about 23.34% in September. Should we expect a swerve, in this projection?
Consumption in the food and in the fast food industry is, competition in the fast food industry is very high. As you said, there are a lot of foreign enterprises moving into this market. So this is going to make it difficult, but not impossible, for producers of fast food to either increase their price or reduce the quality of the products that they are producing. In this regard, the demand for fast food, such as burger, would remain relatively stable since prices are slightly increasing and the quality of the fast food is still remaining at the same level. Factors such as transportation, stable transportation fees, and the growth in Nigeria's e-commerce by 11.78% could encourage this growth, the expected growth in the fast food industry. However, it's important to note that the increasing consciousness of healthy living might impede this growth in the country, even though the increasing consciousness of healthy living is yet to have a significant impact in the Nigerian economy.
And we've seen the prices of flour, tomatoes, all on the rise. Right now, a bag of flour increased by about 93%. This year, we've also seen, a basket of tomatoes also go up. What do you see coming for the fast food industry?
As you said, the prices of its key ingredients in the production of burger is rising. Flour is rising because of the ongoing war, between Russia and Ukraine. Tomatoes is increasing because of the floods in the country. And we can expect more price increases in these ingredients due to higher global energy prices, which will affect the cost of production in the country. Although it is important to note that burger could be deemed as a fairly elastic good, which means that as prices increase, as prices of the commodity increase, demand for the commodity would fall. Producers of burgers know this, and they would not want their demand to fall because this would impede their profit or would reduce their profit. So they would shift a portion of the cost to the consumers while retaining a portion for themselves. This shift to the consumers would increase price slightly, and this slight increase in price could encourage producers of burgers to produce more, since supply increases, increased price increases supply.
And I know some people see, burgers, as a luxury, food. Do you think there are other options, at this time, as these prices go up?
Within the industry, one substitute for burger can be called a substitute for burger is pizza. And even the pizza price is increased by 82% in the last year. And the smallest pizza from any high street vendor is about 1,000 naira. So even though this is comparatively lower than the burger, it might not reduce the demand for burger, even though its prices are lower. This is because burger is not a daily consumed meal. So it is basically it is basically demanded due to impulses and preferences. So it might not have the lower prices in its alternative, that's pizza, might not have a significant impact on the demand for burger. Also, we see that the burger is mainly penetrating the market of those within the below the 35-year age gap. So we see more of its consumers coming from those below 35. In 2014, the Oxford Business Group saw that the fast food industry employed over half a million people, and these people were also within this age group, that's below 35. So we can see from this trend that the fast food industry relies heavily on those from this age group, and these are mostly those from the middle class and higher class, which have an upper class, which have a low marginal propensity to consume. This means that even if changes in their income would not have the same effect on, or would not have a significant effect on their consumption.
Right.
Consumption would not fall as it would for those below their class.
All right, Miriam. Well, we also have the roadside, alternatives. I think that one's called Risky Burger, but, that's a discussion for another time. Thank you so much, Miriam O'Day, analyst, Financial Derivatives Company. Thank you.
Thank you.
All right, now let's check on other stories from the African continent. We see the Board of Governors of the ECOWAS Bank for Investment and Development have unanimously increased the bank's authorized capital from $1.5 billion to $3.5 billion with effect from January 2023. Governors also called for the third tranche capital of the bank, which is in the sum of $438 million. Board of Governors, which comprises the Minister of Finance and the Minister of Planning and Development of the 15 ECOWAS member states, took this decision at its just ended 10th extraordinary session held on 27th of October 2022. And Egypt's net international reserves rose slightly for a second month in a row. It's a North African country with an influx of foreign financing after striking an International Monetary Fund deal. The figure reached $33.4 billion in October, up from $32.2 billion in the month. And South Africa's ABSA Purchasing Managers Index rose from 48.2 index points in September to 50 index points in October. While intensity of the load shedding was less severe compared to September, the Business Activity Index did improve from the previous month at 48.8 points. Still indicated weak output. This was the best of the reading since March 2022. And that's Business Incorporated today. Thank you so much for watching. Tomorrow we'll track the numbers again. I'm Ladi Williams. Bye for now.